One of the burning questions on the mind of Indian investors over the past 2 years has been, how long will this fairy tale run in PSU stocks last? So far, there's no clear answer as the rally shows no signs of slowing down. And with the budget around the corner, expectations are high that the government will maintain its focus on key sectors like infrastructure, railway and defense, areas predominantly occupied by public sector undertakings. This could potentially extend the ongoing rally even further, analysts expect. Now, over the past year, India's listed PSUs have seen their market capitalization soar from $404 billion to $804 billion now. The BSE PSU Index has been a top performer, delivering over 100% returns in just one financial year. And get this, the 56 stocks in the BSE PSU Index have skyrocketed with gains ranging from an eye-popping 703% to 27%. Even the worst performer, Bank of Baroda, which jumped 27% in the year gone by, has outperformed the benchmark Sensex, which is up just over 21%. That's how intense this rally in PSU stocks have been. So what's fueling this surge? Is it just about market hype, or are we witnessing a fundamental transformation of PSUs once known for their sluggishness? The real game changer here has been government's aggressive push on infrastructure and capital expenditure. The government's focus on revitalizing India's infrastructure and the increase in capital expenditure have been the principal drivers for the change in fortunes of PSUs. The centre's budgeted capex dedicated to long-term assets like roads, ports, machinery and energy infrastructure has skyrocketed from 1.9 trillion rupees in FY14 to an incredible 11.1 trillion for FY24-25. That's more than a 5-fold increase. Meanwhile, PSUs have also ramped up their spendings, with capex climbing from 2.6 trillion rupees to 3.4 trillion rupees in that same time period. Initiatives like Make in India have further fueled this momentum, boosting local manufacturing and reducing dependency on imports. This substantial boost in total capex, along with supportive government policies, is expected to drive job creation, attract private investments and steer India towards its goal of becoming a $5 trillion economy. So one thing is clear, there is a reason for this rally. But that brings us to our next question. Have the structural changes brought about by the Modi government and the future growth potential already priced in? In other words, are PSU stocks currently overvalued or undervalued? Now, analysts suggest that many PSUs may not be just overvalued but could be nearing bubble territory. For instance, the best performing PSU stock, Cochin Shipyard, is currently trading at a price to earnings multiple of 85.6 compared to its 10-year average of just 18.4. Even PSU banks, traditionally valued conservatively, now average a price to book ratio of 1.5, up from the historical sub-1 levels. In case of Indian overseas banks, the current multiple is at 4.71, higher than that of ICICI Bank, which is at 4.07, the most expensive private sector bank. But interestingly, if you have spent any meaningful time in the annals of stock market, you would know that during bull markets, high-flying stocks tend to soar even higher, often defying expectations and logic. Simply put, while following short-term trends or momentum can pay off, long-term success hinges on focusing on solid fundamentals and sustainable growth. So investors should ask themselves, are they in it for quick gains or committed for the long haul? For those looking for long-term, experts caution that sky-high valuations should be approached with caution. For short-term players, enjoy the ride while it lasts.